Hello friends, this is Nimish Bhatt from the Alpha Advantage channel. We would be tracking the movement of the market in last week, and also we'll discuss something for the next week to come. Now, looking at the US markets, Friday there was a carnage in the market with most of the indices falling very heavily, especially the semiconductor stocks. So, talking of the market, S&P was down around 2.87%, Nasdaq was down by 4.80%, and while Dow Jones futures were down by 1.59%. Talking of the points, Nasdaq was heavily down by 1400 points in a single day, which was a huge figure comparatively to the rise in last 6 months. The fall was very big, and if we take into consideration on the weekly levels, S&P fall by 2.93 percentage, Nasdaq fall by 4.5 percentage, while Dow was down by only 0.5 percentage. Dow was down only by 5 percentage was because basically on a Friday we had a very huge rally in Dow Jones, which was plus by more than 800 points. Yesterday, that is on Friday, the fall was also same thing with like 800 points, so nullifying the total rise in the Dow Jones. But then overall, if you consider the week, it's still a very good. Dow Jones is stable comparatively to Nasdaq and S&P. Well, Nasdaq, if you consider the total year, that is the year till date calendar year to 2026, Nasdaq is still above by 14.5 percentage, which is considering the 4.5 percentage yesterday's fall. So overall, Nasdaq is still performing better. So those who have invested earlier, say after the US Iran war, which subsided in around March or so, the rally which started, Nasdaq is still giving a very good return. S&P is also on a yearly basis around 7.25 percentage up, so that's also really good. And Dow is about 4.70 percentage also year till date rise. So overall, US markets are still very good in a positive side from year to date angle. Only yesterday there was a huge fall in Nasdaq, and especially in the semiconductor related stocks. In semiconductor stocks, I think the Broadcom result which came out last week, the performance was very good, earnings and revenues were very good. Only there was some issue regarding the guidance in the AI revenues, and because of which we had a fall in Broadcom stocks, that is AVGO. And after that fall, there was profit booking in most of the semiconductor stocks. Any stock which is related to semiconductor, there was a fall of minimum 5 to 10% in most of the stocks. So if you see, the fall was heavy, but if you see from year to date performance of most of the semiconductor stocks, the performance is far more better. And I think there was a profit booking, pure profit booking at higher levels in most of the stocks. If we talk about the international markets, Korea was performing very good with some around 80% plus year to date performance, backed by Samsung and other semiconductor stocks. But that also has a fall last week. Considering the year to date returns, the fall of one day is not that much big. So we can expect some fall in coming week also. We would be playing cautious, and I would suggest basically profit booking is the main point as of now if you are playing semiconductor stocks. The semiconductor ETF, we track SOXX. Yesterday it has a huge fall. In last two trading days, the fall was of around 13% in the ETF. But if you see the performance of the ETF in last 2 months, this ETF has risen by 100% plus. If a stock is rising by 100%, it can be considered basically because of the movement. But an ETF is a bunch of stocks, and that ETF is rising by 100% in 2 months. That's a huge figure. So a booking, profit booking of around 13% in 2 days is just a small minuscule figure. We still consider that there would be further falls in current week also. But considering the rise in at least last 2 months of 100% rise, we can expect a 20-25% fall. But that is a normal correction in the market, a profit booking correction, which is healthy for the market also. And that's really good. Some profits, some money is being taken out, at least the hot money is being taken out, and we will find some base. The Korean markets, if you look at the FII inflows From January 25 to December 25, there were huge inflows in the Korean markets that was specially related to the semiconductor stocks. Current calendar year, we are witnessing around 80% plus rise in the Korean stock exchange, Korean KOSPI index. So, 80% rise in a 6 months on an investment if you have made in last year, that's a really good profit, and definitely it triggers a profit booking, partial profit booking in the markets, and that is what is happening in the Korean markets. The KOSPI index has risen by 80% plus this year, and if you see the FI inflows last year, from January to December, there was a continuous inflow. But this year, slowly and steadily, the FIs are exiting the Korean markets, and they are exiting is basically the returns that they have received in last 6 months. So, because of the profit booking, we see an outflow from the Korean markets also, and that will also happen in the US market, wherein the ETFs and the stocks will be falling furthermore because more profits will be taken out from the stocks. So we would suggest be cautious, take out some profit and sit tight for a week or so, and then we can just see where the markets get support and we can re-enter the market, and we will find some base. We will now talk about the Indian markets. Indian markets didn't have much movement last week. There were 3 days when the markets opened gap down, but they were recovered very well because there were news on the street that the government will be coming out for tax relief for the FIS. There were many expectations on many fronts, like taxation sides on the bonds, on the equities, or even the lowering down of STTs. So there were many points on which the street was talking regarding the relaxation for the FIS. Finally, on Friday, during the market timings, the RBI announced that the government is basically removing the taxation on the investment done by FIs in the bonds markets. So that did bring in some rally in the Indian markets, especially the Nifty around in the afternoon. But when the market closed, we were back down from the higher points. If we see the Indian government's new relief measures taken for the FIIs, it is especially for the bond markets, wherein FII invests in government securities that would be tax free, but that is only for the investment in the government bonds, that is not in equities. So the relief which is being given by the government to the FII is related to inflow of dollars in the bonds market. So equities is not at all directly benefiting from this result, this movement of the government. And hence, I think basically the sell off came during the last hour of the movement of the Nifty. I think we would be remaining at par level only also for the next week. Maybe some sell off can become if the Nasdaq falls more, but in that case also basically we are, as in India is not affected on the positive side, we cannot expect that also on the negative side. So we will be having a stable market. Overall, the downward side, I think 22,300 is a major support for the Indian market. We cannot expect much below that. The lowest range is basically 21,800 to 22,300. The upper side range is basically around 25,000, 25,500, and the topmost range of 26,400. But at current stage, I think there is no positive news on the front of equities. Bonds definitely have a positive impact, and we can expect an inflow of dollars in the Indian economy on the bond side. So that is a good sign for the stability of the rupee against the dollar. And hence, even on Friday, we saw that the rupee got stronger against the dollar, and it may remain little bit strong on the stronger side for the next 1 to 2 months. We cannot expect more than 97 level in INR for next 1 to 2 months. Equities will remain sideways with a little tickering on the lower side. That's for the Indian markets as of now. Stay connected with the channel. We would let you know where the supports will be, where fresh entries can be taken in the ETFs related to semiconductors. Till then, I think there is some fall, and if you are holding it, you definitely had to take out some money out of it.